Great. Hey guys, Robert here with Mr. Texas Real Estate and flying a little solo today. I want to kind of go over some of the stuff I've been doing Facebook Lives on and some video shorts. We have a real interesting event we have every month. It's called Complete Real Estate Investing, and people show up and they know they want something, but most really don't understand what they're actually looking for. Now, if they've done a few classes before, been with some mentors, yeah, they're going to have a good understanding of what they exactly want. But if you're coming raw to this and just know that, hey, I need to start doing real estate investing for whatever reason, maybe your accountant told you, hey, you're going to need some write offs. So go do real estate and use your depreciation to help lower your tax bill. That's a pretty popular strategy. Or you had a financial advisor that said, hey, man, maybe you should start thinking about doing some landlording and being able to work with on a real estate portfolio, or just your Facebook, Instagram, that whole sort of real estate investing lifestyle that you decided you're going to do, right? Or you've watched a whole bunch of those flipping the fix and flip shows out there and thought, hey, really like to do that, right? And I can tell you, like, all that stuff is interesting, but really sort of narrowing down what you want and what you're trying to do. And that's always the first question that we ask folks. What are you trying to do? And most people that we talk to don't want to quit their day job, right? They just want to start getting some alternative motives of some extra passive cash, even though they may not quite understand what that actually means. And so I did a quick little 2-minute video on Facebook, but I'll go over here in a little more detail. So I think it comes down to two things. I think it comes down to your resources, right? So, and the two big resources are obviously time or money, right? So it comes down to those two things. Now, I'll just start by saying, if you have absolutely no money, and if you have absolutely no money, you can't do anything, right? If you have a little money, like, hey, I can pay for gas, and hey, maybe I can buy some books, and I might go to a class and drop $1,000, but that's really the limit there. I would say trying to follow the path for real estate investing is not where you want to start. Now, I know there's a whole bunch of great stories out there from people who did amazing things, with no money and being broke and being in debt. I mean, that's my story. I get it. I just wouldn't wish that journey on anyone. So we tell folks is, hey, if you have no money, but you have time, and again, a very little money, then become a real estate professional, right? Just be an agent or a loan officer, something along those lines, where you're going to be in the business and you'll understand the transactions and you'll understand as the stuff flows in. That's gonna be really important to you. Now, if and that's just, again, very little money, so just become a real estate professional. Now, if you have very little money and no time, then this is clearly not for you. This doesn't work. But if I have money, now if I have resources, I have capital to deploy, and I have very little time. We said it yesterday. I think we said 10 hours or less a month. Then you want to be a passive investor, right? And there'll be a link below on how you can figure out how to be a passive investor with us. But that's probably the easiest thing. And those returns are typically going to be between 6 and 12%. And it really depends on your risk tolerance and what you want to do. But out there in that passive world, 6 to 12 is pretty common. People will talk to you about how they get 15, and it's very, very risky, right? The higher the return, the higher the risk. So a good performing note that is paying every month, or maybe even paying in advance a little bit, 6 to 8% on that is great. That's twice the amount that one might make right now with a CD, right? With a 2-year CD, or buying a 2-year treasury or a 5-year treasury. So pretty strong, double what the marketplace is. If it's a note, make sure you're in first position, and that means you're going to basically have recourse. If anything goes wrong, you can get that real estate. So that's passive investing. And we do a lot of webinars. So make sure you just check out our websites. And that's less than 10 hours. Now, if you got about 25 hours a month, I would say it's okay to be a landlord, right? 15, 18, 20, even up to 25. For sure, you want to be a landlord, right? It's active. And so when we say active, that means the status is active. So you're going to get all the losses against your LLC. You may not be able to claim all your depreciation, but it'll sit there in a bucket for you. You're going to get the cash flow and you get the appreciation. So on that one, we talk to folks about being a landlord. Hey, when you stack all these boons, if you will, when I'm getting appreciation, I'm getting cash flow, I'm getting tax depreciation, right? Someone else is paying my debt. Those returns can look, when you stack them, can look amazing. So yeah, if you got about 20, 25 hours a month, I would absolutely be a landlord. Now, if you've got more than 25 and all the way up to, maybe 40, then you're going to jump into, and everyone talks about BRRRR, right? BRRRR. We call it big game hunting. I'm doing big game hunting over a decade ago. And that's finding a distressed asset, rehabbing it, rent it, and then refi it. And we're going to pick up that property, typically with a private note or a hard money loan, right? So it's a 1-year note. And hopefully we get it deep enough where we can roll most of our money back out and rinse and repeat and go on and on and on. Now, there is struggling these days. And so that model becomes difficult right now. And I know everyone wants to talk about it, and because they've read about it and they've watched other videos on YouTube. But there is a massive hurdle for that right now. And I'm talking, we're here in the spring of 2023. And that is the last R, the refi. It's very challenging these days. There's not a lot of buyers of those notes. The people that do buy the notes at the end of the line are getting a little skittish. So you might have a harder time finding someone to actually pick up the note or qualify you for the note. And while they won't say no, they'll just make the terms really, really onerous, just really hard to accept. But that method is still very, very good. Big game hunting, finding that stuff, rehabbing it with a hard money loan, renting it, and then refining it makes perfect sense. We teach that. We want you to do 10 properties, maybe more, 15 or 20 over the course of 5 to 7 years, roll the equity out, get some off free and clear, and keep moving forward with your portfolio. And it's the core of our 10-house strategy. Now, if you have more than 40 hours, you get close to 70, 80, 100 hours a month, then for sure you want to, and this is what you want to do, then you want to run it like a business, right? And it's kind of what Jason and I have done. We've run this thing like a business so that we have a big building. We've got, different companies that will help with the transaction for real estate. So it's good. But if you come to our 2-day complete real estate, this is one of the first things we're going to cover. Hey, if you've got no money, then this is where you got to be. If you have money and you have no time, then here's the sort of progression that we think makes a lot of sense. And hopefully it makes sense for you. Now, you can start one place and move into it for sure. A lot of folks will come to us with this, very popular myth that, hey, I can wholesale and then I can take some money I make from wholesaling and I can flip a house. And then, hey, when I flip a house, I can start holding the house. And then when I hold the house, then I become, a private money lender, right? That scenario is a dang near inachievable. It's really, really, really tough to be able to do that, for sure. So we look at this all the time and we're like, hey, just pick an area. If you want to flip, that's okay. Flip, right? We're doing some good deals out there. I'll talk about some of the deals that we're just wrapping up now. But for most people who have resources and not a lot of time, sort of landlording or lending the money or, if you can find that 40 hours a month, then you sort of want to land in that where you're capturing a lot of equity. So That was the main thing I wanted to talk to you about today. The other thing is flips. Back here, spring 2023. We're just wrapping up a deal right now, getting our funding in line for a 73% ARV deal. And that would be on a 650,000 ARV. So they're out there. They're good. There are some things we talk about. We have a meetup every month here at the building. It's the Texas Real Estate Investment Center, where we go through, what that $100,000 net flip looks like. And this is a perfect example of it. So when we do our class in June, I'll use this example, but it's a house that we bought. It's a good number. It's going to take about $125,000 in rehab, puts at 73%. We're super happy about that. So we can almost get 100% financing on it. We do have a private lender that we'll probably want to talk to and see if they'll be able to help us out with it. We like using private money often. Terms are usually better and they can close quicker. But again, if you're going to go out there and you want to do flips, there are flips out there. For sure, there are flips out there. Now, here's the trade-off these days. One, the construction is going to be extensive, right? This isn't a sort of lipstick on a pig where we're just going to go in and paint the walls, put new floors in, change out a bunch of faucets and make $50,000. That's not what we're talking about. The construction is going to be extensive, right? Foundation work, roof, electrical. We're going to have to do a lot of stuff to windows, right? We're going to have to do a lot of stuff to that project. Now, we look at all that and we can make our numbers work. You can make $100,000 on that flip. Now, I know that when you run the numbers, it'll be more, but don't forget there's carry costs. There's going to be some cash to close. And then when we sell it, we're on the seller side. So you've got the commissions you got to give up. You have to pay for your half a title. There's a couple other fees that you're going to have to pay for. So when we do all this and we look at it, hey, if we're in under 75% ARV, we typically can make it work. And if the number's big enough, right? If it was 75% ARV and it was, $200,000 ARV, things just get really, really tight. But at 650, we can make it work. So we are finding flips as well. I highly recommend you guys check out our website. Come to our 3-day class. Our 2-day class. Now we brought it down to 2 days. We're going to cover this stuff. You can flip in this market, right? They are out there. There are people buying, right? Housing prices continue to go up. Days on market shortening. Pardon me. It's a good market if you are bold enough to go into it. That's what we're looking for. All right. So, hey, I don't have much more to talk to you about today. That's it. Hey, remember, time and resources are what you're going to need to bring. If you have neither, I just don't think this business is for you. But there is a path forward if you have a little bit of money or if you have a little bit of time, right? That's going to be really critical for you. So, hey, check us out, mrtxre.com. There should be some scroll there or stuff over that way. We'll figure it all out as we go to this new format. But, hey, guys, thanks for listening. We appreciate it. Again, if you're just starting out, you should come to our 2-day. But just know from the beginning, you're going to need resources, probably time and money. Thanks, guys.